Do you own Paytm as part of any of your publicly, announced portfolios? And in case yes, then could you give us a sense of what you have read through over the last 3 or 4, trading sessions, the way the story has unfolded, and of course your own sense in the new age tech stocks? Is it a red flag for all of those who are holding on to such companies?
So in one of the schemes we did have, when with this negative news came out, we have roughly in our quant mid cap fund, we have around 6 lakh shares. Okay, but we are able to exit that position when if any some sort of risk, unknown risk comes into picture, we as an organization do tend to react, and we have sold off those that we precise
Okay.
6 odd lakh shares. We are able to exit from that thing. Currently, we don't own anything in the company, but it's a very token exposure we had in our portfolio, which was like very one of the hardly had any impact on our.
Okay. Uh, and as part of your other new age tech stocks, where exactly, how are you looking at deploying fresh money? Is it a right time to look at some of the improving financials as we are looking at this space?
See, if you recollect, we have been very cautious about what do you call it, new age company. We believe that the cycle actually peaked out in September 2021. We never participated in the new age companies. None of the vehicles we participated. And we have been cautious. We sometimes tend to nimble if we get some opportunity here and there, but broadly we are still not very constructive in this space. A, valuations are extremely rich. Okay. Uh, and the second problem in terms of continuous supply, which keeps on coming from the private equity side. Okay. So if I look at the combination aspect, we don't like to own any of these names in our portfolio precisely because supply aspect has us given the expensive valuation. But if they correct significantly, and we feel see a stage where they become very attractive, we are very open for it. I say we are unconstrained fund house. We never say no for anything, but it fits into our broader thesis, then we will like to participate, but not at this point.
Okay, not at this point in time, right? You did point out how you are market cap agnostic as well, but when this year started off, everybody was talking about how after the stupendous rally of mid and small caps, perhaps this could be a year when the large caps could make a comeback. What is your own sense when one really deploys funds, on the market capitalization basis? There is a divided opinion out there because we are still looking at mid and small caps. Not there is no let up in the kind of rally that we are seeing even in this space, even at this stage. How would you really advise a fresh and new investor approaching this space?
First of all, we don't go by opinion or consensus, whatever is there in the market. I know there is a consensus which is building up that small cap will underperform and large cap cycle should come back. Again, it's the consensus. Okay. We don't believe in any consensus. We are data driven house. Our data analytics is showing something very different. We still believe, and our data is showing that small caps has still more legs. Okay, but so we are not negative on the market, and I always said on multiple channels we have talked about, we have not seen any classic signs of euphoria which is required for market to peak. Or the market typically peaks out when liquidity is extraordinary, risk appetite is on the highest level. Okay, valuations are extremely rich. So when we talk about our own VLRT framework, when we get this entire thesis through a predictive analytics model, that's a time we'll become very cautious. And right from October 21st, we have been talking about risk on rally on the horizon. It has played out quite well. I think India risk appetite is rising, liquidity is in our favor. The only challenge is that, yes, valuations are stretched in some of the sectors, some of the companies. So we keep on doing sector rotation, stock rotation, and that's why we're trying to dynamically rebalance our portfolio on continuous basis. So that whole idea is that ultimately we have to generate superior risk at this return. We don't want to take
Yes.
unwarranted risk at these levels. Okay, so sector rotation, stock rotation helps me in bringing down my perceived risk also. So we are very comfortable even participating in the market if anybody has a longer term horizon, which investors should have. I think it's a great opportunity because I said something has changed in India. India is very going to be in a different league. So we are very saying this half century belongs to us, this decade belongs. So that's the mindset we have for India. Okay, but again, we are not trying to give you a sales pitch that one should aggressively participate. We are trying to larger thesis is very good. Any dip opportunity in India will remain buy on dip strategy.
Okay, buy on dip strategy. You did talk about two or three stocks that have been a part of your portfolio: ITC, RIL, and HDFC Bank. On HDFC Bank and on banking space, now I want to understand from you. Has HDFC Bank really disappointed you over the last 4 years, or are you going to be a patient investor and believing in the long-term growth story in HDFC Bank, even going forward? And on the private banks, large banks, is it a good time to start building onto a portfolio which is filled with some of these large banks?
So first clarification, we don't own HDFC Bank in our
Okay.
portfolio. We exited in September 2023. Okay. And we have been very cautious on the banking sector as a whole and private sector in particular, because we have been talking about that we see the way banking is we practice it right now in India and globally. Something will change globally. We have forecasted that by 2047, the concept of the leverage economy as a concept will lose its relevance, and banking are the product byproduct of this leverage economy as a concept, and hence we are very skeptical from a longer term perspective of banking as a sector. And again, if I look at from the risk appetite perspective or over ownership perspective, this sector has been grossly overowned for a while. And we as a house never chase indices or mimic indices. So we generally don't, we are active money manager. Currently, if I have to look at our banking exposure, I'm talking pure banking, not NBFC. Pure banking exposure will be far lower than maybe 3.5 or less than, definitely less than 4% of our portfolio. We are cautious on the space because though we are not negative, what is very important, I'm finding relatively better value somewhere else. And this business is about absolute and relative returns both. If I'm able to generate better relative returns somewhere else, then I will sacrifice these smaller absolute returns and look for a better opportunity. Another, this thesis, we don't own banking in our portfolio. Yes, we have a very large exposure in Reliance across our all portfolio, and it is our topmost holding. So you can say nearly 10% holding is what is the maximum limit is allowed by SEBI we have in this particular stock. So we are very constructive. As I said, we are very constructive on the energy as a thesis. Okay. And Reliance Group as a company is being the flagship company. It has all right portfolio if talk about, whether talk about green energy or hydrogen or talk about analytics, telecom, okay, retail, all the segment which market gives fairly expensive valuation to the niche players. Okay, we believe Reliance has still not get as a combined entity. I think that will somewhere it will correct, and market will give due respect in terms of valuation what this company deserves. That's the reason it has been a conscious call and data driven high conviction call. There's something similar we did maybe 1.5 or 2 years back in ITC. And as of now, we don't own anything in ITC. We have exited completely last year. But we made good amount of money when we spotted ITC were trading in the most neglected and hated zone. And something similarly we noticed in Reliance Group also. It was in the neglected territory few months back, and that's the reason we have built this exposure. We believe this has a potential, and that's the reason is a high conviction which is reflected in our topmost holding.
Okay. Mr. Tandon, to carry this lending argument forward in the PSU space as well as the private banking space, are we given to understand that in an economy that is sort of appreciating by about 6 to 7% each year, there is little or no merit when it comes to the banking space in terms of shareholder gains?
Can you just repeat? I have not understood your question.
Okay, I'm just trying to ask that when you say that private banks or the banking space in general offers relatively lesser value
Okay.
compared with other sectors, are we
Yeah.
given to understand that an economy which is expanding at 7% and is about 3.5 trillion in size, banking does not offer value?
So, Shailendra, it's an interesting point. See, we have to look at two ways. Okay. Are they very expensive? Answer is no. Okay. But this expensive and cheap is a very relative term in life. Okay. And sometimes Some of the NBFC was getting at 9 time book, and some of the PSU was getting at 0.2 time of the book. So what is fair? I think over a period of time, market will realize that. What is very important to understand when we look at our stock selection methodology, we are multi-dimensional research house. We don't look at just pure valuation. Okay, valuation, pure valuation does not give you all the answers. Okay, so this is a very common debate which we see right now. Everybody's for last 6 8 months, people are talking about valuations are rich, but market is one way moving up. Okay, people do give me this example: what happened in 2000, what happened in 2007 8, or what happened in 2018, or something similar in 2021. But the characters, if you look at one dimension, obviously it was purely valuation multiple. You get some answers. But you have to also look at what was the liquidity at that time. In 2000, liquidity and today's liquidity is multiple times, maybe few hundred times differential is there. And so is the case from 2007 8 also. Look at the risk appetite. Risk appetite is completely different for today, which I explained through our perception analytics in the initial part, that India perception analytics is improving significantly, which means the P multiple will expand further going forward. So what we are talking about, if I'm looking at an isolation, I don't get answer. When I bring multidimensional as a concept, okay, then we believe there is no signs of euphoria. Similarly, I'll come back to your answer on the PSU banks versus private sector bank. If you look at the very simple methodology, valuation wise, PSU banks are significantly discount to the prevailing book value of the private sector banks. Okay, that's a point number one, purely from the valuation, great comfort. Point number two, look at the over ownership and under ownership. Private sector bank grossly overowned, everybody owns it. Okay, because index Nifty itself is around 40% weightage for the PFSI, so you can understand most of the people mimic the benchmark. So it's a very skewed in our portfolio, so that people are overowned, the portfolio managers are overowned. Third most important is to look at the perception. What is the perception? PSUs are untouchable. Okay, multiple money managers will tell you we don't buy PSU as a theme. Okay, we don't like government companies. Okay, this is an area which are untouchable for it. Doesn't fit into our investment thesis. Okay, unless this thesis changes, okay, and majority of the people get sucked in this rally, then only you will see the peak happening. This is purely from a behavior perspective right now. So chasing has just begun. Okay, under ownership remain in a big way. So if you ask me whether I like to, if I generally we don't like banks as a concept right now, because we think relatively banking sector will underperform. But within the banks, if I have to choose, I will choose PSU banks, because we strongly believe on multiple dimension research if I have to do, and multiple analytics tool which you use, we very clearly say that PSU has a potential, PSU banks has a potential to outperform private sector banks significantly over few years. So maybe if I have a longer term perspective, let's say a decade call, I think they will remain constructive for a long period of time. And today, if you really look at, people are in denial mode. Okay, people are not willing to accept that something has changed, because the majority is with the view with the private sector bank. Because as a human being, you tend to have a biased view. If I'm holding a large position in private sector bank, I'm tend to talk positive about it. So okay, it's a human thing. So you have to understand purely from a behavior perspective. We look at completely unbiased, and data points are not very constructive, and hence we are not negative. So it's not like they will not give me deliver returns. They will give absolute returns to me. Some of the stocks looks good, but on relative basis, they will underperform significantly.
I think that's one of the most sensible explanations I have ever heard in the PSU banks versus the private banking debate. Mr. Tandon, you've alluded to some parts of the FMCG staples being a bit expensive than what is comfort to you. What are the other parts of the Indian corporate listed sector where you think one should stay away from?
Yes, I said that, right from beginning 2023, I am saying that, time has come where one has to look for value as a thesis, rather September 2021, and move out from all the sector and stock which are trading in the most admired rating. So you have to very simple it is, so all the stocks who are trading in the admired rating, the first biggest sign, they will be grossly overowned. That's the first sign. They will be grossly expensive. That's the second point. And third, there will be best of the analysts, best of the money manager will be talking very constructing, including media house will be talking very constructive about that. Okay, so when I look at these three characteristics together, I still believe people have not shifted from the over owned or admired territory stock to value or the under ownership. So I think this value as a thesis or PSU as a thesis has far more legs than what people perceive about it.
Okay. Mr. Rannan, your views on the auto space, especially, stocks like Tata Motors, which have like surprised so many over the last 1.5 years or so. Again, the earnings have come about so, positively. And of course, the stock is at a record high level again. How would you really look at the entire auto basket? Would you be keen on the main OEM players as of now? How are you looking at the auto ancillary stocks that are probably linked to the EV space and have actually performed very well over the last 6 to 8 months odd? How should one be really approaching the auto sector at this point? Where is it that you find more value?
So very simple it is, if you really recollect in the initial stages, the growth came back to the urban, particularly in the premium segment. So premiumization as a concept we have been talking about for long, and obviously the four-wheeler fits very well into that. Okay, that's the reason whether it's all the four-wheelers has done extremely well in terms of if you're talking about consumption as a theme. But now the way two-wheelers are coming back, okay, two-wheeler signs of a rural economy, two-wheelers are morely driven by the tier 2 and tier 3 cities or the smaller towns or smaller villages. Okay, so very clear indication if you look at the way the uh, or the two-wheelers have gained market share or they have moved up in the prices. That's the first indication that something has changed. Now so far we have only seen the urban consumption moving up. I am saying that's the reason in the beginning I talked about that we are seeing early signs of rural economy or rural consumption increasing. With that background, some of these two-wheeler companies should also do very well. But as a overall consumption, whether you talk about two-wheeler or four-wheeler, obviously linked with then it's come your auto ank also. I think the space looks still very attractive. And if I look at if I believe India larger thesis of consumption and manufacturing story, I think it fits the checkbox both the things. So I'm constructive. The only thing one has to be very selective because I agree some of the select name which you talked about have rallied a lot.
Okay.
Sir, when you look at the renewable space and also the new energy theme that is reverberating outside within the market, how are you playing this? Are you looking at power producers? Are you looking at equipment producers? Are you looking at multinational? Are you looking at corporate houses in particular who are getting deeply into this new energy space? What is the best foot forward in this segment?
See the challenge is there ki yes everybody understand this is a space which is picking up and this is the new energy or renewable energy what is going to be the future actually if you talk about by 2030-32 I'm extremely cautious on the crude where the renewable will be replacing up to large extent on the particularly on the crude or the this thing. But what is very important to understand is that the all the equipment manufacturer, the companies which we are talking about, they're all quoting at fancy valuation. Okay, the size is small. Okay, insignificant if you ask me. Okay, they will not contribute not even a percentage of what numbers we are talking about. Okay, so I am not a great believer of some of these unique companies which market perceive very healthy. Okay, yes, if you're early in spotting them, you have optimized that opportunity of the current level. I think I will go and play as a mutual fund house with the larger names. I will play bigger houses. Okay, some of the large corporate houses who are putting a few billions of dollar investment in this space. Those are the companies which I will look from a longer term perspective or maybe a decadal opportunity perspective rather than saying that something is happening in 6 months or 12 months because I personally feel nothing will happen. All the larger companies which are implementing these projects, nothing will see the real impact will only felt from 2027 till 2032. So if you have that 5 to 8 year horizon, I will go for larger companies rather than small companies.
Okay, I would just like to draw your attention on the digitization theme. over the last 5 years, Mr. Tandon, we've seen the economic landscape change with the advent of the UPI, with the advent of the Janthan account, and of course, all of us now bank through the mobile phone. How do you think that is getting reflected on a longer term basis within the lending space in the listed segment, sir?
So I will say yes, it's a big transformation. Okay, and this is something which we have indicated to in the beginning, that how the leverages economy is something will get changed. I think digital is the future. In what form, what shape, it's still evolving. So we will like to bet. We have already taken few bets, and we like to identify some of these companies who have potential, because right now it will be very difficult to say with 200% confidence that this will exactly play out, because it's an evolving space. Okay, and if anything which is evolving, then we have to be patient investor and monitor these development very closely and see how it unfolds. As it unfolds, and if you see opportunity, will like to participate. Even I like to participate at even higher levels also. I don't mind, as long we are getting visibility about it.
From one D to the other, defense, how would you look at this space that also has really surprised many with the kind of move that we've seen on defense space, sir? And do you think, again, this is a structural long-term story that one has to play, especially when everybody's calling it India's decade? Of course, we've seen the kind of success we've had with some of the space missions in the past. So do you think this is a space that one should be looking at structurally?
So I agree this space is very interesting from a longer term perspective, because I'm a big bull of India manufacturing as a theme. I said this is a thesis which I think so far people talked about only how China has done very well. I think India is one area where manufacturing will be surprise many of the local investor as well as the global investor who disbelieve India. I think that's a one thesis which I'm very constructive. Within that also, obviously, defense is one area we should look at, but the challenge is same thing. Some of the smaller companies or drone companies or some smaller component who has provided, to some of the missions, they have rallied so much. Okay. So if you ask me whether I'm a participating at these level extremely or extraordinary valuations, I'm not. Their liquidity is pathetic. Okay, there is no exit for us as an institution, so we'll not like to participate. I will still go for larger team, bigger companies, both from the private sector as well as the public sector, where scale plays a role. Because this is not a theme which you just get over in 2 years' time or few years' time. If I believe that India manufacturing thesis has just begun and it has potential to last for many decades, then I will go for larger names. And as an institution, we have that much patience to live with these names where liquidity is very good, valuations are not very stretched, and I get a size.
Mr. Tandon, as you rightly mentioned, you stay away from the consensus. What has also emerged over the last 1 year or so is this concept that India is an island of safety, a place where you get consistent equity returns as also predictable GDP growth. Is this a consensus that you believe in?
See, I tell you, it's not about we are anti-consensus or we take a contract call. Okay, it's not. It's a data-driven call. Okay, it's a data-driven house. Okay, so we say that we are an analytic firm, not as a money manager. So money management is a byproduct of analysis which we do. So from that background, we don't. As I said, you have explained us we are unconstrained house, so we are not too much bothered about what the consensus is getting built, how people are perceiving. When it comes to number, we spend sizable money for and invest a lot in data analytics. So we track our high frequency data very closely. We look at the global macro very closely. That background is a evolving, ever evolving house. Okay, it's not like we form opinion and live with that. Now we have downgraded or we have upgraded or there's a view we have built. Not, it's not the way we operate. Okay, because we strongly believe that we live in a very dynamic world, and hence our money management style also has to be equally dynamic. You can't have a static money management style, and that's the reason we keep on rebalancing our portfolio. So with that background, as a house, obviously we are a very macro house. I think Indian macro, if I have to look at, I have never seen such phenomenal macro in my 30 years of career. I always said that
Wow.
so many times. both on absolute and relative basis. Absolute is good, but what is very, very important is relative. India is in a very unique situation relative to China, relative to US, relative to Europe, relative to emerging market. Maybe few countries like Indonesia and other thing can really say that, yeah, they're also competing with India in that money. But otherwise, in larger economy, in a very unique situation. And this is the problem for most of the people who are looking India in isolation. Okay? When you look in India in isolation, you get your feeling it is extremely expensive, prices have rallied a lot. But when you start looking from a relative perspective where India is coming, I think extraordinary money will come to in India in 2024 and going forward.
Wow. That's such a fantastic comment, Mr. Randan. And, of course, this gives us more hope that, we should be fully invested in the India story at this point in time as well. Since you say that, perhaps you're seeing the best of the macro setup across you in 30 years of your watching the markets as well, do you think that its markets will not depend on any triggers now? It is going to be on autopilot and things are just going to go one way up, because so far every time we had been discussing, okay, budget is coming, that's the new trigger, RBI policy is coming, that could be the new trigger, USFOMC, the directions they set, that will be the new trigger. Do you think at this point in time India is so self-reliant at this point that things will just be on autopilot and the markets will continue to move up despite any triggers too?
No, I don't want to be so complacent also.
Okay.
Okay. Yes, relatively better, but it's never a great strategy to be very complacent and everything will move up as we are perceiving now. I always say that in a dynamic world, data points are changing. It's not something that tomorrow uh, a geopolitical event will not unfold or something else will not unfold. It's very difficult to visualize. As a house, we believe that this decade will remain more volatile from a geopolitical perspective, and we have been saying right from 2019 onwards till 2030-32, this decade will be more volatile as compared to the past one, particularly in a geopolitical front, and we have already seen that part. So what is very important is that instead of taking for granted few things, this what has already been worked out well and everything is moving in that direction. I will not like to have that rosy or complacency about picture. No, not a rosy picture which I like to believe. Yes, I say relative is good, but if there is if let's say I always say if somebody is going to vomit in Europe or US, if there is no stink in India, that will not happen. Okay, the impact will be far lower and lesser. But ultimately, we live in a very interconnected world. Okay, so we have to be very clear on that part. If something is changing and changing very fast, it will impact us also. So that's the reason we say that agility in money management plays a very big view. You can't take a 10 years view. Okay, this is a 10 years view, because I always say that, it's a lazy style of money management. Purely from a risk perspective, if I say, because managing long-term risk is very easy. I say, if you manage money for 10 years perspective, even your multiple mistakes are hidden if you say 10 years view. Okay. But what is very interesting in the from a risk management perspective, when you manage your short term and medium term and near term risk better, I always say you not only protect your portfolio, but you will also generate alpha out of it. So the strength of in today's world, so dynamic money management, which is building up globally. Look at, I always get inspired by US, what is happening. People manage the medium term and near term risk very well as compared to India. And that's the thesis which we also trying to build, what we call a dynamic style of money management, where we are trying to manage a decadal view, a long-term view, medium-term view, short-term view, all possible type of risk we are trying to address simultaneously. And that's the reason construction approach is very different. We can't just build a portfolio, everything from longer term perspective. A portfolio has long term, medium term, short term, near term, special situation, cash call, hedge call, all possible risk we will manage simultaneously. That's the way we generate superior risk adjusted returns.
Right. And Mr. Tandon, I wish this interview were to continue for 2 hours, but sadly, both, at least
Yeah.
you are running out of time, and we'll have a final question with you, sir. In 2024, we will see the entry of Indian sovereign bonds into the JP Morgan Global Bond Index. How do you think that changes how globally look at the how global investors look at the Indian sovereign balance sheet, and how will that impact the positioning of the rupee, as also the longer term view on the Indian balance sheet?
So it's a good question, and I obviously straight away link with the USD and IR as a pair. And the strength of a currency also reflects the strength of the economy. That's a generally, as a student of economics, this would generally we have been taught. Okay, the only China changed this whole concept. They use depreciation of a currency as a weapon, and they try to optimize the opportunity. Let's come back to India. Okay, we as a house, we have been talking about right from 2019 that Indian rupee will depreciate, has potential to depreciate towards 88 to 90 by 2023, and we came very closer to that mark. Our view currently with this background also, we believe very constructive rupiah or USD INR from a medium term to longer term perspective. Let's talk about from a longer term perspective, let's say next 5 6 years, I think rupee has potential to appreciate significantly from the current level. We are in this camp who believe this is a step in right direction. It's not something that overnight it will change because this announcement has come and rupee will immediately appreciate. No, it is one flip in that direction. So we are anyway very constructive. We believe worst is over for USD and INR in terms of depreciation. It has potential to appreciate over a period of time, and this is an important trigger. So we will watch it very closely, and I think it's a healthy and positive development for the capital markets.
Wonderful. Mr. Tandon, thank you so much for your time. This is perhaps the best 40 minutes that Sakshi and I have spent with the guest, trying to understand the genesis behind Quant Mutual Fund. Thank you so much for such wonderful thoughts and such great views on both the macro as well as micro during Indian stock markets. Thank you for your time.
Thanks, Sakshi. Thanks, Arindra.
Thank you.
See you guys. See you.
That, ladies and gentlemen, was absolutely the finest brain on Dalal Street, discussing how the Indian macro balance sheet, as also the strength of this rally, and in particular the PSU pack will do in the coming years. Thank you so much for your time. I hope you enjoyed this show as much as Sakshi and I did. It has been a great learning experience, and it also answers the most critical questions. Have PSUs overextended themselves in this rally? From the likes of what Mr. Tandon has told us, there are of course better things ahead for the PSUs, but that will be accompanied by some corrections over a period of time. Thank you so much for your time. Stay glued to BTTV.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. PwC presents